Welcome to our daily Forex market analysis, and this is for trading on July 31st, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. And in terms of the news here today, Okay, so in terms of the news here, we had Bank of Japan, monetary policy statement and press conference. They didn't really do anything, didn't really take any action in terms of monetary policy. So things stayed the same. And as a result, we have seen Japanese yen kind of hold steady. Now, we also had consumer confidence numbers for the US, and they came in positive, but it didn't really have much impact on the market because the markets are waiting for FOMC statement coming up tomorrow. So tonight here in the Asian session, we have an active Asian session. We have manufacturing PMI numbers out of China, which will have an impact on New Zealand dollar and Australian dollar because they are the biggest trade partners with China. And then we also have our New Zealand dollar. So we have business confidence numbers for New Zealand, as well as our CPI, which is inflation numbers for Australia. And both of these will have an impact on their respective currencies. So coming up here on Wednesday, very, very important here. We do have a bunch of other data here, but the important stuff here will be, first of all, ADP non-farm employment numbers. So these are precursors to our non-farm payroll numbers coming up on Friday. So these generally have an impact on the US dollar, but considering that we are waiting on the FOMC statement, they may actually not be, move the market as much. And then we have Canadian GDP monthly numbers coming up here. So Canadian dollar has been strong today because of oil. So if we see these numbers come in positive, that would be good for Canadian dollar, and we could see Dollar-CAD drop as a result of that. The main event for tomorrow, though, is the FOMC here. So this is very, very important. The reason for this is that first time in a long time here, we are seeing the Fed actually drop rates. So we saw a big cycle of rate cuts from the Fed when the financial markets crashed back in 2008, 2009. Around that time period, there were about, I think, 10 interest rate cuts that the Fed did. And last year, they had been raising rates. So now this is a big shift in monetary policy from the Fed. So basically, they are going from raising rates to cutting rates. So a huge shift in their stance in regards to the monetary policy. So at this point, though, a lot of the Fed members have talked about this interest rate hike. So it won't be a surprise for the markets. However, if we see a bigger interest rate cut than what everybody is thinking about, which is 0.25% cut, but if you see a 0.5% cut, that will be negative for the US dollar. Now, another thing that can happen is that Fed can cut rates right now, but their forward guidance may actually be bullish. So they may say something like, they're just doing an interest rate cut just for insurance purposes to ensure that the economy doesn't go down, and they're not going to continue doing the rate cuts. Or they may say, oh, we're not going to do another interest rate cut till next year, something like that. That would actually be dovish forward guidance, and as a result of that, we could see US dollar go up. So we have to be careful with this one. Expect volatility in the markets. Excuse me. As well as the liquidity is low right now because a lot of the traders are away on holidays. So summer months are usually low liquidity months, which means the market can move on news a lot more than it would generally move. So keep that in mind. Other than that, we have more PMI numbers here out of China. Like I said, if you're trading the if you are not trading Chinese yuan, but they will have an impact on Australian dollar and New Zealand dollar. So that's what we have for news. So let's move on to our charts now. So we'll start out by taking a look at our euro dollar. Yesterday we were looking for a move up, so we got that. And now we have another bullish close here. So bias is bullish here. Now do keep in mind, even here, we are into the support resistance level here, but bias is bullish. And I would look for price to move up here. And the target here, so this is the type of move I'm looking for, and the target is 1.1200. So bias is bullish for euro dollar. Now, with the Fed or with the FOMC, things can change completely depending on what the comments are and how they do this interest rate cut. So just be careful. We are expecting volatility in the US dollar tomorrow. But for now, just based on the technicals here, bias is bullish and the target is 1.1200. And above that, we are looking at 1.1220. So bullish bias here for euro dollar. All right, next one here, looking at our pound dollar. Yesterday, we were looking for a drop, and here we are into 1.2120. So bias is still bearish, but do keep in mind we are into support here. So price has dropped quite a bit here, and we have this inefficient move here. So price kind of dropped quite rapidly. And that means that it can reverse as well. So I would be cautious here with the pound dollar, but bias is to the downside just based on technicals, but do keep in mind the support levels. So coming, so the following, so our targets here, actually I could move this back up here, let's see. Okay, so the target, the first target here will be a 1.2080 level here, and then 1.2020. In terms of a pullback, we could get a pullback overnight here, especially as the markets align to the FOMC meetings. We could get traders closing their positions, which means the market could trade in the opposite direction. Plus, it's month end, which means traders may be closing their positions, and that will normally that would normally move the market in the opposite direction. So we could get a pullback into 1.2200 here, and then looking for a drop just based on the technicals. Now, with the FOMC, if the FOMC is actually bullish, this is likely to go in the opposite direction. And in that case, we could get a move all the way into this level right here at the top of this, this candle here. So for now, bias is bearish. First target, 1.2080, then 1.2020. Bearish bias for pound dollar. And then Aussie dollar here, we have seen price drop. Yesterday, we talked about how if price stayed below 0.6920, it's likely to drop. So we got that drop. So we have a nice bearish candle close here. So bias is bearish. Now, do keep in mind we are into the support, so we have to be careful. So this is where price had turned around previously. we had a nice drop for a few days, and then price had turned around. So here, bias is still bearish here. Now we could get a pullback into 0.6880 or 0.6890, and then a drop here. So bearish bias and looking for price to drop, and the target is 0.6820. So bearish bias here for our Aussie dollar. New Zealand dollar here, yesterday we have had an indecision candle. We got that drop because it did stay below that 66.40 level. So now we have a nice bearish candle close, but we are into support here. So this is where price had reacted several times before. So things could change here. So here we had a nice bearish candle close right into the support, and then price jumped up after that. So be mindful of that. However, bias is bearish, looking for price to drop. And this is the move I would look for. Pullback level is 0.6620 and target is 0.6565. So bearish bias here for New Zealand dollar. Dollar-CAD here, we saw oil go up today, and as a result, we saw Dollar-CAD drop, because when oil goes up, Canadian dollar goes up, and when Canadian dollar goes up, Dollar-CAD drops. So today we have a nice pin bar here for Dollar-CAD. Now keep in mind, we are into support, so it could turn around here. However, bias is bearish. First target will be 1.3120, and second target here is 1.3080. So bearish bias here for Dollar-CAD. Gold here, gold is still holding above this previous support and resistance. That means it has a bullish momentum at the moment. So price has been trading in a range, and the first target here, so bias is bullish here because of the nice bullish candle close. And in terms of our pullback, I would look at potential pullback into 16.50. Sorry, not gold. My apologies. Silver. Silver, like I said, holding above. Everything else is the same, except this is not gold. It's silver chart. So bias is bullish. It's holding above this support resistance level, as well as this support resistance level at 1615, which is a major level. So bullish bias for silver. First target is 16.65, second target 16.90, so bullish bias for silver. Gold here, same thing with gold here as well. It's been holding, and we have this trend line to the upside. It's been following this trend line. So today we have a bullish candle close. Do keep in mind though, this is into resistance because price has turned around from here. But this is looking bullish here. But first we need to see a breakthrough and then a pullback hold above and then a further move to the upside. So for gold, bias is bullish. 1450 is the target here. So bullish bias for gold. Oil here, oil has gone up. Yesterday we were looking for that move higher. Today we got that. So as we can see, it's been making its way higher. So bias is bullish. First target here is 58.80. And then the second target here would be 59.80. And then of course, we've got 60.40. So bias is bullish here. Now we could get a bit of a pullback. And if we do, then it will be into 57.65 and then a further move higher. So bias is bullish here for our oil. Copper has actually dropped. So we did not see price go into the higher resistance. It dropped right from here. We have a nice bearish candle close here. So for now, bias is bearish based on this engulfing bearish candle close. I will look for a potential pullback like that, and then a drop. So bearish bias here, but this has been trading in this little range here for quite some time. Pullback level, we're looking at 2.65, and then first target would be 2.60, second target would be 2.59. So bearish bias for copper. Bitcoin is still holding. We have two neutral candle closes back to back. I was looking for a break below the support so it could move to the next level, but it hasn't really done anything. It's waiting. So at this point, bias is neutral, very, very small candle body. So we have to wait and see what price does before we take action here. So if it breaks through 9050, chances are it could drop further. So we could get one of these, pull back and a drop. In that case, the first target would be 9050, bottom of this candle, and then we have 8465. So bearish bias for Bitcoin for now. S&P 500, we are into all-time lows. So market has, or equities markets have been quite bullish because everybody is expecting Fed to cut rates, and that's supposed to be good for everyone. So bias here is bearish though, because price has not broken the high. So I would look for price to drop. So as long as price holds below the high at 3020, I will look for pullback into 3020 and then drop into 2950. So bearish bias here for S&P. NASDAQ here, this is another one similar here. So bias is still bearish as long as it stays below 8020. So now looking for price to drop further. So we could get a pullback here, but target is 7810. So bearish bias here for NASDAQ. All right, DAX, a big drop in DAX here because ECB actually was not as dovish as everybody had thought. So we have seen Euro hold up quite nicely. And as a result, we are seeing the DAX markets drop. So huge move to the downside, bias is bearish. And now we are looking at next target is 12,036, or let's say 12,000 even. So bias is bearish. Potential pullback level is 12,200, and then a drop. So bearish bias here. Okay, FTSE moved higher into the support resistance level. Then it has pulled back. So we have a bearish candle close. However, if price holds above this level, then chances are it could go higher. So at this point, this one looks like a pullback because overall here price was high, and then it's come back down. So we have to be careful here. If it breaks through the support level at 9620, it could go back into the bottom here. But for now, as long as it holds above 7620, I will look for price to go up. Nikkei here, this one is nice bearish engulfing candle close. So the next target here would be to the downside. So bearish bias, 21,300 is the target. 21,300. So bias is bearish. All right, so that's all I have for today. You guys have a wonderful evening. Just be mindful of the Fed. It can create a great deal of volatility in the market. But that's it. So have a wonderful day tomorrow, and I'll see you later. Bye for now.